Well, welcome back. This is an edition post, the one that we didn't have last week, of XM.com's Peter McGuire talking markets. We're remote today, and Pete's coming in from Coogee, where he's probably had a good swim this morning. He's definitely shaved, and he's looking very switched on. It's not a lot of news happening this week, Pete. So is that kind of causing this relaxed COVID-related let's work from home project?
Well, good morning, Will, and good morning to everyone. Yes, here we are. It was, I think, a little bit of a reality check. We saw a good number Friday night as far as non-farm payroll. That led us into the US Independence Day, which was 4th of July, naturally, and the markets will be shut today. So we've got a very quiet week expected, Will. The only central bank really reporting will be the RBA, that's tomorrow. That'll be Tuesday. So, and I'm not expecting any real surprises there. So overall, a general theme of positiveness leading us into July.
Pete, as we look around the market, last week was interesting. I mean, Australia had a significant lockdown. The rest of the world's coming out of lockdown. We'll cover a little bit of post-Brexit news later. Segueing back here, Pete, just for a few moments on some of the coverage that's happening around the region. And I draw reference to Bloomberg because I think they're a fantastic source of news. We're talking about China. We're talking about Asian stocks being steady, markets dropping as a result of the oil disputes. And the big news, and before we get into the big news, actually, I really should talk about cybersecurity. It's been another big play over the last 24 hours, certainly leading into the 4th of July. Cyber ransom experts have taken out quite a few sites. They've hacked them. They've delved in and they've identified, again, more flaws in large organisation corporate technology assets and internet connectivity and just software security plays. Mass ransomware hack, big issue. Not new. We've been reading about it now for a while, and again, it's become new again as I guess as people find new and emerging ways to disrupt. And probably worth talking about because that's going to take a lot of organisations offline. It's going to disrupt a lot of business, and and I'm not entirely sure that what's my question? My question is, why is it happening? When will it stop?
I don't know when it'll stop, Will. That's the issue at hand. Naturally, there was so much talk over the last 12 to 18 months as far as crypto being the method as far as payment to these hackers. So there's the first part. We're not sure, no one knows where it's actually coming from. There's been talk it was Russian, Ukrainian, North Korean, many different nations across the world, China. So first off, you've got to identify where it's coming from. Secondly, how you manage those threats. It's very, very difficult for business continuity and the cost of business. And as you mentioned, and so many businesses are online now as far as payment processing and all distribution from purchasing, supply chains are now totally changed from bricks and mortar now to tick and click. So there's the story. One can only imagine that it's just going to pick up from here as far as more disruption over the years ahead. So yeah, it's certainly something that all from a trading perspective, one's got to be mindful of, and from a consumer point.
Pete, let's rip into today's slide. So market pricing is more progressive, says the Fed. Market sees 3 rate increases by end of 2023. The Fed says 2. What's your view at XM?
Well, I think that it's a mixed bag, Will, because you've got some of those members thinking that they're going to be, even 1 or 2 even in the end of 22, and then a couple in 23. So I feel at the moment I've got to be sitting there as far as the Fed's overall decision and not for each particular member of the board. The first part is it's too early to call. The second one is we want to see how that taper starts to be eased back from the market as far as bond buying and all the other central banks around the world following Q. One thing is that it's nearly been priced in. New Zealand will be first cab off the rank. They're looking at raising rates in February. So there's the storyline there. What happens as far as momentum building forward? When does Australia play? The RBA is going to give us a clear indication. And as far as the Fed's concerned, I'll go along with their rhetoric at the moment. But, with the numbers that we saw on Friday night at 850,000 as unemployment number, that NFP for June, that's a fairly strong number. It was fairly overwhelming, and I would have thought that if you continue to hit those numbers close to 1 million each month, then there's a bigger chance they'll take take the stimulus out quicker, and in turn you might see a change as far as policy.
Pete, they're fair comments, all of them. And picking up on the comment you made about unemployment, certainly the RBA is suggesting that the unemployment reaches pre-pandemic levels, so we're actually re-employing people in the country, so therefore stronger than the RBA expected. The shutdown's probably complicated things a little bit in the last couple of weeks, but again, the RBA is feeling positive about the unemployment levels at this point.
Well, exactly, Will. There's no trouble getting a job, and it's a bit of a race as far as different firms outbidding each other for the right talent. There's the first part. It's a very learned workforce, as we're all very much appreciating. You know, it's quite common in my day when I was growing up. It was normal that people would go down the university path, but a lot went to trades, and not everyone actually went and invested time and I think the resources for a university graduation or a university degree, but now it's certainly changed, and it's a very learned workforce, a flexible workforce, and a very application built workforce that can move across many different industries over your life phase. So you could be across 5 or 6 different industries by the end of your career versus the Boilermaker that stayed in that career all their life.
That's a fair comment too. The learned workforce is there, and no doubt having an impact on who's hired and who's held. What is that really telling you though about, I guess, the workplace of the future? I mean, we've seen the rise of the trends, gig economy. We now know that the gig economy doesn't necessarily create great long-term structured benefit for individuals, driving gigs as opposed to regular and sustained employment. But we do see the benefit of, being able to identify good talent that we can bring onto projects from time to time. I mean, has the way of work changed? I mean, of course it has. We're doing more and more in a new way every day. What do we see next?
Well, yes. Very much so, Will. It's changed considerably. Now far more collaborative, gives people also the understanding that you can work from anywhere. That's the beauty as far as web-based solutions. So we've got that opportunity to really be anywhere in our work life and work from there, unless you're naturally a plumber or you're doing other, you're attending businesses of work, going into someone's home, or you're doing different services. But for a lot of people, they can work anywhere, and that's the beauty of iPhones and the connectivity. So yeah, we're not bound to be here. I am in an office, at home, because it's a lockdown, and there's no reason why I can't work all day quite easily from here. And a lot of people around the world are doing the same.
Good comments, Pete. And look, as we jump into the next, the dollar yen, is it a prisoner of interest rates? If the Fed normalises, what does it really mean? Will it continue or not continue to trend higher?
Well, at the present time, I think that yen's been under a little bit of pressure, and I wouldn't be surprised to see a little bit of a bounce. There's going to be a long time till you see movement as far as interest rate rises, Switzerland and Japan. So I just feel that maybe that US dollar index is sitting at that 92.27 handle at the moment. There could be a little bit further upside, but I'm not really sure you're going to see a continuation as far as, movement to the upside for that dollar. We're still 2 years away from any real sign as far as interest rate rises. That's what they've got us to believe. So at the present, I think that the US dollar may come under a little bit of pressure to the downside, and in turn, yen may appreciate a little bit.
All right, well, there's the trade signal. Listening to XM.com's Peter McGuire right now. Here we have probably the second last chart that we look at today. We're talking about the oil storm. It's storming higher. Will the CAD follow? It kind of interestingly looks like the vaccination numbers are going up in Canada, but maybe there's still a few shutdowns on the horizon.
Yeah, it could well be, Will. I mean, that 123 is your handle as far as Canadian dollar versus US dollar. It's bounced nicely. The Canadian economy seems to be doing quite well. So there's that sense that you might see a little bit further strength for the Canadian dollar. Overall, it's a commodity trading country. It's very similar to Australia in its footprint, larger population, of course, but it's quite a a dynamic economy. And again, I think it's going to play very, very well from a tourism side as it unlocks, and naturally, sitting to the north of the US, it's a great country to be associated with, joined at the hip. So I think Canada's going to do quite well over the next 12 to 18 months.
Well, there's always a good story coming out of any part of the world if you scratch hard enough. And in this case, in Canada, up near Saskatchewan, there's a little Australian little company called Vital Metals, and there's a buy signal there. It's the first. It's pulling the project up there that they're operating, and this is the really unique news, is that the local tribe, the Indigenous tribe that actually controls the area, where is actually the tribe that will actually extract the ore. So they're the people running the project, they're the people on the project, and they're, for the first time in history, as I understand it, in a rare earths context, the local Indigenous tribe will be a real contributor to the extraction, processing, and profit over time of this product, of the project. So just a little Canadian story to share on the side. Pete, sure. US stocks. I mean, it's always fun to look at US stocks. There's plenty of them. The chart up on screen is the US 30, and as we look at the US 30 and we sort of look at those record highs and we see the market come off a little bit, turns, feels a bit bearish.
Well, when I'm looking at those numbers, that what we saw after Friday's night, which Friday's report NFP at 850,000, the overwhelming confidence that swept through the market on Friday, Dow was up 0.44, the S&P was up 0.75, the Nasdaq up 0.81. Will, so they're all hitting fresh highs, all-time highs each and nearly every day. So the first part is that I'm very conscious, never get in the way of a bull market. So do we see a reversal, or do we just see that growing momentum? At the present, it's too hard. Money's so cheap. Companies are performing so well. I think there's probably more upside. Everything seems to be booming. You look at energy prices, have a look where the dollar is, and equities. Equities globally are doing well. So there's the storyline, and the present, I think you have to be a brave man to, go against the trend. All
right, so your signal there is play a day-to-day open brief, keep a watch on it, and keep a real weather eye on what's happening there, looking for those signals.
Absolutely, Will.
All right, Pete. Well, listen, I've got a final comment to part on, and I want to talk a little bit about, beyond Brexit. We've covered Brexit for quite a while. We've seen Brexit happen. We're watching now the unpacking of what all this change now means, and perhaps we're trying to draw out a picture of what are the new trade signals, if there are new trade signals in play already, that allow us to look at Europe, look at the UK, look at the relationships and the dynamics playing out there. And I caught the comment, I think it was a Reuters comment that probably played out in your newspaper, the Financial Times, over the weekend. But the European Commission said that on Tuesday it would seek to boost international role of the euro and build European financial infrastructure so that the EU becomes more independent of outside financial centres. I presume here we're talking about the dominance of the dollar.
Yeah, very much so. And, we've had very good moves to the upside over the last couple of weeks with that US dollar index, and they've been hit pretty hard, the euro, the yen, the pound. So the trade has been very, very strong. That US dollar index has performed very well over the last matter of weeks, and to the upside. So in turn, there's always a time that it becomes exhausted. There's a time for it to settle down and possibly pull back. And now maybe that time as far as that US dollar. So many traders are looking at that from this short-term charts, they're 4-hour, they're looking across multiple currencies, and then the currencies as far as crosses, yen versus pound, euro versus dollar, all of those, Kiwi versus Aussie. The list goes on. So there's always opportunities. You've got to just have your screens open. You've got to look at the fundamentals, of course, and then your technicals that indicate what the behavior of the market is showing. Is it overbought? Is it oversold? Is it exhausted? Where is it on the moving averages? All of those key components need to be analysed and in turn deciphered, and then look at how the market trades.
Pete, some strong comments there, and maybe we'll come back to this conversation, because if if the European Commission's firing up and sort of starting to talk about it, I suppose we'll watch this unfold over the next 3, 6, 9 months and track those signals forward from there.
Absolutely, Will.
All right, Pete. Well, look, it's been lovely to speak to you remotely today. We'll cross back later in the week, perhaps, for a few other stories as they unpack. I'd be keen to follow the oil story, see what happens there, and sort of and maybe correlate that against a couple of the known signals that are oil related, and we'll perhaps bring a few updates to viewers throughout the week.
Absolutely, Will, and thank you, and all the very best.